So
Yeah, I just imagine.
USDY, GBP USD, Euro USD, what else?
Yeah, you can see them
Okay.
right here.
Okay, so the seven
ADUSD,
majors. Okay.
USD,
Okay. Okay.
GBP USD, NCD USD,
Okay.
card.
And these pairs have brought you the most success in your trading as when you started with your approach.
Yeah, yeah.
These pairs have brought you the most
Okay.
success. Okay.
Okay. So now I just want to quickly share something. Now right before the using the white cup. Yeah, yeah,
Let's continue.
yeah, yeah. Just love crypto or love stock index. That's US30 or the NAS 100. You can just focus on. So the why it's now. I just want to quickly say something. I just have a quick talk on quick talk with my partner. And so he said micro schematics might be sounding so new to people, and just using the divergence alone with structure is going to be actually the best approach. For so what I'm actually saying the micro schematics before was the reason being that if you're the type that still loves the dollar liquidity and the stuff, the standing of those liquidity and the likes, you can use Wyckoff as sorry for that. My network was so you can see me right.
Yes.
Hello.
Yeah, we can see your screen.
Yeah. So my network just okay. So my network took me out for some time. So as I was saying before, so the Wyckoff schematics now. Okay. On some daily outlook, the weekly outlook on some pairs. Now you should be focusing on. That you can focus on. Not it's not a must. That you can focus on. And you can ask me for the outlook. I'll send it to you. I'll send it to the Telegram group after the section, and also I will view it and just do a quick review on it. So now, right before that, now for the Wyckoff schematics, we'll be dealing away with the Wyckoff schematics for now. So, but if you need, if you're still interested in it, you can just tell me, and I am willing to help in any way I can on that. So, but right here now, we'll just be focusing on just the structure and the divergence alone. So the structure now, we want to see the revisit to the other block, which is the other block was right here. So let me take away this distribution so it won't get so this was the test of the other block right here, where that was the test, and followed by coming immediately after that test. So we're looking for a divergence meaning in the sense that if price is actually making higher highs, we want to see price making what lower lows and stuff like that. Price actually moving in one direction and our RSI divergence moving in the opposite direction. So right here now, we can see from this point here, price created what these higher highs, but right here price created a lower high and a lower high. But right here, higher high, higher high. So that indicates to me that there's there's a divergence right here in price. So that indicates to us that banks have started pushing price to the downside little by little. So right now we don't just pick this divergence alone. We want to see a break in market structure on the 1 minute time frame. So we saw a break in market structure right here, which occurred right here. There's a break of low. There's a break of low right here, which happened with this candle right here. So now what we're looking for now is the mitigation of that block that broke structure. The mitigation, so let me extend us to here. So we're looking for the mitigation of that block that broke structure. So if you look here now, the mitigation of that block, this one is not something nice. So, but we're looking at this other block here, this bearish other block that broke structure right here. So I said before, the way I do my other blocks is what the last for a supply order block or for a bearish order block will be what the last buy candle before the momentum candle. So, and I'll extend the proximal line or the distal line to the highest point. So right here now, this is my bearish order block, which is right here. That's my bearish order block. And yeah, and you can see our price traded right into that place where we got a sell to sell off. You can see just repeating the same process over and over again, at the same time. I'm just doing the same thing over and over again. So this one that we have 2.6, just added 3 pips to make it, let's say 5.0 pips should be okay. So my major target on every trade is 1:10. You can see our price now. This is the one of the major reasons I don't throw my stop loss some of the time. If I'm on the right, if I'm not doing the counter trend, if I'm doing the counter trend, I kind of throw my stop loss. But if I'm doing the right trend, I don't throw stop loss because sometimes price might just come back and do a retest of the other block before dropping, doing the actual drop. And if you're actually done a trading of stop loss, might have taken you out in just not getting to your main target, because I will be targeting 1:10 to this point or to the low of previous day. You can see our price traded to the low of previous day. So some people might say there's a liquidity sitting at the low of previous day. That's like you can see equal lows being formed around here. So they would aim for what? The low of previous day, low, yesterday's low. You can see I labeled it here, yesterday low. So we had the yesterday low here. So and that will be our target. You can see our price got retraced back, but didn't take us out. Then what we had before we hit our target for 1:6. But if you're targeted 1:5, you'd have gotten out on this trade earlier enough. So there are two ways I clear my stop loss. Is either I break even at 1:5 and I let it go to 1:10. So if I targeted 1:5, but this particular one here, it was 1:5 because of I wasn't seeing that much when price was going in my direction. I wasn't seeing that force push to the downside. I wanted to see a strong push to the downside when price was going in my direction. So right here, right now. So that's just basically it. So any question so I can know?
Yeah, I got a question. If you could please, Mark, zoom in to the break of the low.
Okay. So this is a break of the low.
Yeah. So my question is, you chose that break of low.
Yeah.
If you would have just asked me, like of how, from what I know, then I would have had the low a little higher.
The low a little higher.
So if you take the line and then just pull it up, and then I'll say stop, and then you can tell me why that isn't the right low that I chose.
Okay. So I'm going up. Just let me stop.
Yeah, a little bit more. Stop right there. Down.
Okay.
How
Yeah.
far?
That one exactly.
Yeah.
Guy.
Okay. Yeah. So that is actually a low. You can also pick also. That's also a low because you can see price actually took out a high here, but
Yeah.
I was focused on those plays. Like I said before.
You
We also hello.
Rich,
Who is that?
Rich, just hold on, please. Everyone should mute their microphones, and then one person asks the question at a time. Augustine, your mic is on. Mohammed, can you put everybody's mic on off so that Joe can? Okay. So Joe, ask your question.
Yeah. Okay. So yeah, you can continue now.
Okay, so yes, this is a low you can pick. It's a valid low. You can see there was this was a structure where the push to the downside, which created a higher low followed by what a higher high. So it's a low you can also pick. So thanks for that question. So because I know some people might have been thinking about it also. So this is a low. So you can see our price broke the low. There was also a divergence here, and then what you can enter right at this point here. Yes, very very valid. You can enter here. This is a bearish order block or a supply order block, which is right here, and then what you see our price traded right into that place, and then what fell to the downside. So that's what also a valid place for entry. Do you get me?
Okay. Thank you.
Yeah, you're welcome. So the next person. Next person.
Sorry, Mark, can you do you still have time for you to do one more pair?
One more pair. Okay. So let me see.
Like US 30 or so. I saw your chat.
It's like you're a US 30 lover. You mentioned US 30 cents.
I love indexes. I'm faster.
Okay. So for the US 30 now, on the daily chart, I won't like to make this complicated. So we're just going to do it fast on the Friday price action. So getting the highs and lows of Thursday price action, which is going to be yesterday highs and yesterday low. I'm coming. So this is just the highs and lows. Yesterday high. So just get on the highs and lows of the previous day and do a daily separation. So you can see here, me right? Hello.
Yeah.
Yeah, bro,
Okay.
we see you.
Okay, so now after doing that, now we just come to the 1 hour to do what a separation of what the London, the New York, and just the London and New York, which is from 1 a.m. New York time down to 5 a.m. New York time. Then the New York section, which is from 7 a.m. New York time down to 10 a.m. New York time. So after doing all of that now, so so as I was saying before, so we got the highs and lows of and whereby separating our London and New York key zone. So after doing that now, you come to the 30 minutes to see your structure right here. So we had a structure right here in price. So let me kind of expand it. So let me take out the highs and lows of previous day so the chart won't get too messy. So now we're looking for structures from the Asian, which was created in the Asian. So right here now, you can see from previous, the price has currently been what's in a shift of market structure to the upside. And also the Asian session came along and also continued that what shift in market structure to the upside, also giving us a continuation push to the upside. So all we're just focused on right here now is to buy, nothing more and nothing else. So we had a demand order block right here, which is right here in price. This demand order block. So this will be our directional demand order block. So now for the US 30 now, for the stock index now, the timing of the US 30 where price spikes is kind of a little bit different from where stock the normal forex markets and some other markets spikes. Major spikes happens in US 30 and as found in an other stock at 9:30 a.m. New York time down to 4 a.m. New York time. That's when spikes occur. That's when spikes occur. So the spikes occur around that time. So you can see we had this demand order block right here. Now, if you check here now, we had multiple demand order blocks now. You can be looking at this one. Some people might have been looking at this one, but if you're to take your fib level from year to year, you're seeing the one that is best to take is this and this. So this one wasn't our major focus. So we're looking at this one as a trap for price to come and take out and move into this one. So this one will be the one we actually focused on. So when we had it there, we're looking for entries right now on our 1 minute time frame. So spike timing, the spike timing happens from 9:30 a.m. New York time down to 4 a.m. New York time. And we're looking at an optimal trade entry. So I'm looking at an optimal trade entry around that period. So that's when it happens. It happens from 9 a.m. and you can see the spike. You can see the spike. So that's what we're looking at from 9:30 a.m. New York time down to 4 p.m. New York time. So that's when we're looking for that spike. So but I don't focus on that spike that much like that. You just use normal structure. So to actually get that spike, because if you're not getting your structure right and all you just focus on is getting that spike, because the structure is what is going to lead to the spike. I get me. The structure will lead to the spike. Not the spike will lead to the structure. The structure will lead to the spike. So you have to just use the spike and the timing to your advantage. So now are we going to the 1 minute and getting our entries right here on the 1 minute. So the two ways you can actually get in on this there was actually two entries right here. We had one entry on the before the London section rather. So, but right before we got that entry, because I wasn't looking at the US 30, I just got this zone on the US 30 on Friday, but I didn't trade it. We didn't trade it on Friday. We just draw the zone and we're just looking at it because we didn't trade it. We're just going to kind of like just see how the market works on the US 30 and stuff like that. So right here on our divergence here now, we can see price created lower low here, and that lower low. Now we're looking for the break of market structure first. Where did the break of market structure occur? We had looking at structure, we had this is a lower low, lower high. then followed by a lower low, then a lower high also, and then what, a lower low. So now this, we had a break in market structure here, a major high, break of high on the 1 minute, which is right here. Now, before you confirm this break of high as a strong break of high, you won't see, was there a divergence before this break of high? Because you want to see banks already giving us that push already before we enter. Now you can see there was a divergence. Price is moving lower and price is moving higher here. Price creating lower lows and price creating higher lows. So that's a divergence, RSI divergence right here. So we had an RSI divergence right here. So this will be our divergence below here. So this was a valid area for you to enter. So, but now, note that we've not gotten to that area. We're just trading off the London and the New York now. We've not gotten to that our spike timing. That was spike entry on the US30. So some of you might have been waiting for that spike entry. So that's where price came back again. He tested our full area of demand on 30 minutes. This was the retest again. Now, for you to get that spike now, you can see how this works consistently. Now we're looking at what the lower low, looking at price structure again. We had what lower low, yeah, then lower high, then followed by a lower low. So what is happening currently in that lower low and lower in that lower low is being created? What is happening as banks started pushing price to the upside? You can see there's a divergence right here. So you can just focus on the US30 if you're a lover of US30 alone, and you'll be good to go. So this is the divergence being formed. This is the divergence below. So we had the divergence right here, followed by a break of market structure. There was a minor structure, which is like the structure wasn't that clear that much, but this is a structure here, break of high. We had a break of high in price right here. Then we got entries down below in this bullish order block below here. So this is your entry right here. Hope you can get me right. Hello. Yeah. So you can see one entry in the New York and also one entry in what's in your spike timing or the spikes kill zone. You can see it's from the 9:30 a.m. down to the 4 from here. Looking at price from this 9 a.m. New York time down to 4 p.m. New York time. That's when the spike. So you can see the spike here. You can see how the spike occurred. So are you clear on that?
Yes, absolutely. Thank you very much.
Okay.
What I mean by spike timing, because in stock index, there's always a particular time where price is going to spike in every single day. There's always a particular time. So we're just focused on catching that spike. Like most traders, they focus on just catching that spike because that's where they make their own profits. So we kind of there's a time window when that occurs, and it's from 9:30 a.m. New York time down to 4 p.m. New York time. That's when the spike. That's when we're looking at that period. So you can see how it happened right before. It happened around 2 p.m. New York time. So that's the spike timing. And some people use it to get the optimal trade entry also. The optimal trade entry from the 15 minutes. They use it to get the optimal trade entry also. The optimal trade entry will be from this point here. Be from the area here, from this point down to this point. GOT level, the optimal trade entry, ICT optimal trade entry. You can see it's aligned with the optimal trade entry level right here. You just buy here, put their stop loss below here, and you can sell a spike. So if you decide to just focus on just USF, even instead of looking for 1 minute confirmation entry, you can just use this automated entry to your advantage. You can see how price go to the automated entry, and then we had the spike. And this works consistently. If you're to backtest on it, it works consistently. Anyone else again?
In this stock, we target also 1:10.
I don't get you.
Risk reward is 1:10 in stocks, US30.
Yeah, risk reward 1:10, 1:5, depending on your reward appetite.
Okay, someone is asking, what do you mean by spike timing?
And I think I've played that, right?
You've played that one. Okay, that's fine. I think you've exhausted quite a lot, and there's no question. Okay. I think you've done like 40 times 3. You've done like 2 hours.
Yeah.
Wow, that's a lot. That's a lot. Does anybody have any other question?
Okay.
Okay. Okay, so thank you, Mark.
Okay.
This lesson
Okay.
has been
Okay. Before that, I just want to quickly share the something about the outlook that you can, if you're actually focusing on the weekly swing trading. So this is an outlook that you can look out for in sales. So we're looking at this is a 4 hours time frame for a weekly swing. We're looking at price within this area of supply. Then we look for selling opportunities right here. So that's on AUD/USD. On EUR/USD, the same stuff here. The breaker block plus a fair value gap and what the mitigation on that block combined together, making a price resisting that area. We sell off at that area right here. So on the XY, okay, they don't do the XY. So the XY, AUD/JPY, the same stuff. So I'll kind of send it to you if you need this stuff. If you need this stuff. So I think Nana.
Yeah.
So I think I'm done right here.
Yeah.
So thanks for coming.
Okay.
And really appreciate that.
Yeah, we are also grateful. I'm sure at least I don't know if we'll be able to get you next week Sunday, but we'll talk during the week. See if we can get you next week Sunday. And I trust that once again we are not sharing anything strange. It's about insights in the market. And if you have one of our own who is doing very well, why not learn from him and add or incorporate whatever you studied from our mentor? So we are grateful. We want to say a big thank you. Hopefully we'll get you next week Sunday. Hopefully we'll get you next week Sunday. But let's talk throughout the week. So basically, I think the last session we had, you said you start trading on Tuesdays.
Yeah, if you're a weekly swing trader.
Weekly swing trader. So on Tuesdays, that's when you'll be entering your particular trades and your outlook, at least the ones that you shared with us.
Yeah.
So we want to say thank you. As time goes on, once everyone gets the basics or the basic concepts right, market structure, you call them kill zone sessions, right?
Yeah.
Kill zone sessions and all that. After a lot of sessions, and then we have that feel that everyone, at least the regular people who come, they are getting to a certain level, then we may disturb you a bit more, as in during the week, if you don't mind.
Okay.
At least with the weekly swings, not the daily, or the daily sessions, you need to be on there looking at your charts with that 1 minute precision to be a bit tricky, but with the weekly swings, we can disturb you a bit when we've had a lot of sessions and we really understand yours. As I mentioned earlier, if you don't have market, you don't have market structure right, all that he's talking about with the divergence and all that, you'll not be able to get it. So you need to get your market structure right. You need to get the basic concepts, market structure, breakout structure. Okay, he has introduced divergence. He's introduced kill zone, you call them kill zones, eh?
Yeah.
Yes, so we need to get all those things solid before we move on to the next step. There are people who want to skip I'm sure, Mark, you also took some steps. It took you time. It was a process.
Yeah, it was a process.
Yes, so there are people who want to skip certain process. Otherwise, you make mistakes and then you make losses and you come back and say, Mark's approach doesn't work, Pabi's approach doesn't work, but that's not it. You get it? So we want to say a big thank you, and we'll keep worrying you, at least till you are still on social media. We'll keep worrying you, okay?
Yeah.
All right, thank you so much.
You're welcome.
Yeah,
so have a nice day.
Okay, same, and a profitable trading week too.
Okay, thank you.
Okay.
You too.
All right. Bye, everyone.